Hi traders, welcome back to another workshop. So I believe one of the very common questions is when you look at the chart and you start looking at all these minor levels on lower time frames or on high time frames, and you're there struggling to actually think at which level should I enter. So if you ever have these questions stumbling across your mind, or if you are constantly facing this problem with your entry levels, with your specific price position, then please watch this workshop, right? So we'll use Euro Yen current market condition for an example. Regardless whether if you are trying to go short as a seller, if you're trying to go long as a buyer, there are multiple levels. So let's talk about from a seller's perspective, right? So one of the common problems that I see retail traders make, especially beginners, is when they start looking at the high time frames or maybe on the lower time frames, without identifying what's the current market condition, they start drawing a lot of lines. All right, for example, this, we have a lot of levels. You can see here we have a swing low as well. There we have another swing low. More swing lows here, lots of levels, right? So if you don't really know how to identify what's a real support, what's a real resistance, then it could be a big struggle for you to even think about entering a position. And the origin of this problem all comes from one thing, which is you not knowing how to identify a market condition. So if I were to ask all of you, what is the current market condition? Let's say we remove all the drawings, zoom out to the 4 minute, to the 4 hour. What's the current market condition? We can arguably say that it's in a range, right? Is it really a trend yet? No one knows if these will have a follow through, but overall this is in a range, right? See that? So a lot of people start seeing that massive sell-off. They say, hey, that turns into a downtrend. Not yet. All right. If price were to turn into a downtrend or an uptrend, it requires more follow-through. Follow-through technically means if we break through this low, we are required to see price either continuing lower, or if it does pull back deeper, then push down. We need to see price creating a new low. So once you know that this is in a range, then you pretty much know that what is your ideal entry price. When you're trading a range, the ideal entry price is always the upper range or the bottom range, or what we call the upper band, the bottom band, or the resistance or the support. But the big problems why most people fail to trade a range is because they keep trying to get involved in the middle of the range. I'll give you one example. So if you look at this one, this is another typical range as well. We have our resistance right around that 142.58. If you look at the level here, 142.58, right? Then we have our support right around here. So if I were to block out the future, let's say this part, the main reason why you're losing money trading a range is because every time when price forms a range, right, you actually don't know it's a range. Including myself, you will never know if the market is forming a range or a trend or whatever kind of market condition without at least a few retests, right? Without at least something forming on the chart, then you know, hey, maybe there's a range, right? Including myself, I need a bit of time to observe in order to see, are we in a range or are we in a trend? Or are we in a chop market, grinding condition, etc. So if you start trading this kind of level like 142.25, maybe you say that, oh, price pulls back here, form a bit of resistance, then you start trading around this kind of level, or maybe the ultimate resistance. That's what we call an ultimate resistance. So let's say the ultimate resistance is right around 142.58. Problem is, most people just don't have the patience to wait for price go to the level, because we are all reactive. Reactive as in we see price do something, we have the urge to quickly jump onto the chart. So for this one, imagine if you were in that situation and you say, I want to trade around there. You have a solid plan. You say that I know the market is in a range. I want to trade there. I want a TP here. Example. Then as price starts failing to go back to the high, you start overthinking. You start having the sense of urgency to say, I think it's not going back. I need to do something. If I were to wait like this, what if this goes all the way down without me involving in the move? That's when you start trading things like this. You go short, saying that you're trying to comfort yourself and say, let's remove my first plan. Let's ditch the ultimate resistance trade and I'll trade here, because here we have a sell. You start picturing different things, right? We have a sell. Right now we're in a pullback. I want to short it. We have a beautiful candle as well. And maybe you get stopped out right there. Assuming you get stopped out right here. Then you start forgetting that the market is in range. It's a very common problem that when you start focusing or when you start violating your initial plan, the moment you start taking that first trade like this, that's usually when you go into tilt mode. Alright, so you take a short, then you get stopped out, then market continue rejecting here. Right after you get stopped out, the most painful thing is right after you get stopped out, you see price move under your entry level. That's when you start saying that, shit, maybe I have my stop loss too tight. Right now it's moving. Then you re-enter the trade here. Then guess what? You get stopped out right there. Right after you get stopped out, what happened? Price dropped all the way down. Think about how big players are trying to manipulate your mind here. You get stopped out on the second one, then you say, shit, right after I get stopped out, market immediately move all the way down. What should I do? You start drawing hidden zone like this. That's what we call trading the mid-range. Remember, trading a mid-range basically means we have a wide range, but instead of focusing on the ultimate high or low, there's a period of time, there's a moment, there's some mistakes that you've made that have caused you being so dwelled into the mid-range. Usually it happens when you violate your rule, you didn't be patient, you wasn't patient enough to wait for a price to go back to the ultimate high, then you take the short just because price formed a bit of movement. That's what we call over trading or FOMO. Alright, then you start drawing a zone like this, you start trading the mid-range without realizing that you are actually on tilt. Then you start doing things like this. Oh, that's a beautiful one. Price broke through 140.78. A lot of failures means that we're not going back to the resistance. Guess what? Price failed your entry, reversed all the way up. Then when it starts reversing all the way up, guess what? You have no more risk allocated at the high. Or to simply say this, you overtraded, you have no more bullets to trade here. Or your confidence is being affected, which causes you to not pull the trigger, or maybe after 3 losses, you jump onto other path. Does this sound familiar? Alright, so I'll just quickly go into pound yen. The current condition on pound yen is what we call a pro trend as well. This is usually the kind of condition where a lot of people just don't seem to have a lot of patience. So within my community, I made a mistake. When price formed this massive reversal here, I actually called a possible sell when price came back to retest 182.50. But the big thing is, right after I get stopped out on that trade, I stopped trading. That's what we call a circuit breaker. It's like, I know something's wrong. I need to prevent myself from getting into the ugly situation. And that's the difference between a good trader and a struggling trader. It's not that we are smarter. It's not that we have better technical skill. Obviously, maybe yes. But the key difference is still, what made a difference is when I know something goes wrong, I know I have control over my own decisions. As long as I don't pull in random trade, it will never hurt my account. Your account is being hurt The moment when you start pulling off random setups, when you start bottom trading, when you start revenge trading, etc. So like this one, this is the kind of market condition where a lot of people are caught off guard as well. Assuming if you are looking at this, that was exactly what I was looking at as well. When price formed that lower high, because here we have the ultimate high, right? At 183.85, when price confirmed this low high, dropped aggressively, especially when we have this follow through, we actually caught the first wave here, right? But the main thing is we failed to caught the second wave. Not failed, technically we're wrong on the second wave. Price reversed all the way back. That's when I actually was looking to sell, because I realized that I have the tendency to revenge trade, to be overly biased when the market is in a pro trend. As in, if the market keeps moving high and high and higher, higher, I usually will have the mindset to think it's impossible. It's impossible. The moment when you start thinking that it's impossible to be so overbought or so expensive, it's impossible to be so oversold, to be so cheap, that's when you're caught trading on your own opinion. You are actually enforcing your own opinion onto the market. Instead of trading with evidence, instead of trading with confirmation, instead of trading what you see, you're trading your belief system. I believe that the market will go down. And that's that kind of period you have to be, you need to have a lot of awareness to actually also have the confidence to say, I'm not looking to trade. There might be a bit of opportunity, but I'm confident that even if I miss out the cycle, even if I miss out any of the setup, I'll still come out profitable. That made a big difference, right? Alright, so as price continue chop here, this kind of market condition is when a lot of people forget that we have an ultimate high at 183.15, also another ultimate high at 183.84. Then you start saying that, oh, we have a minor resistance. Maybe you start going down to the 15 minute, then you go short here. We have rejected that level. If I go back, we have rejected the level, massive sell. I'm going to short here, stop loss right above the high, something like this. Guess what? Get stopped out. Right after it gets stopped out, price came all the way back to your entry. Remember, the most dangerous market condition is a range. Why? When price stops you out, then immediately pop back or reverse back to your entry, that create a sense of FOMO. That gives you illusion as well, as in, I think it's just my stop loss problem. My stop loss problem. And when you start thinking like that, right, it's very dangerous, because right after price come all the way back, especially having that sell, you have the tendency to go short, even tighter stops, because your belief system is telling you that price has formed multiple rejection, you won't go back to the high, but you forgot that we have another key level above. What you're trading is, you're trading minor level, you're trading intermediate structure. Then guess what? You get stopped out. Right after it got stopped out, dangerous thing happened again. The market come all the way back to your entry. Guess what? You have more tendency to go short again, or maybe this time you play a little bit safe. I'm going to have a 30 pip stop loss. Like this. You get stopped out again. Then at this point, you're caught on tilt. You don't know what you're doing. You're trading for the sake of trading. You're not trading with evidence. You're not trading with your game plan. You are purely trading your belief system. You're purely trading your own opinion. And yeah, the cycle repeats. Maybe you lose 3, 4, 5 on this one. And when price really does go up, that's when you say, that's when you finally awake and say, is it an uptrend? The market is moving higher. It's in a pro trending condition. I was revenge trading. That's when you go through a period of pain, because indiscipline hurts you a lot more than taking a proper losses. A proper losses means you have everything planned out, but you still take the loss. So that is something inevitable or unavoidable. When you take a loss according to a game plan, plan out everything, multiple scenarios, according to your strategy, market conditions aligning, that is a good loss. When you lose that kind of trade, give yourself a pat on your shoulder and say good job. Right? But if you lose a trade, not knowing why did you lose the trade, not knowing what the hell did you do, that is the most painful one, because the pain of being indisciplined hurts you 10 times deeper than losing money. It's not just about losing money. It actually damages your psychology, damages your confidence as well. So if you're someone who are constantly caught being indisciplined, constantly caught breaking your own plan, breaking your own strategy, not respecting the rules, your self-confidence is going to be from there when you first started trading, drop all the way to rock bottom. So I hope all of you actually learned something new from this workshop, and remember, successful trading is about sticking to a plan and actually having a plan, planning out multiple scenarios, backtesting what you are doing, because backtesting gives you confidence to know the things that you're doing, is it really valid or not. Sometimes you're caught trading random patterns, right? You see something you have never seen before, your intuition, your instinct tells you it might work, and then once you win that position and that ingenious sort of just duplicate this onto your future. So next time when you see this again in the future, you'll do the same thing. But then you just keep losing, not knowing what reason, not knowing what's the exact reason. That's because you have not tested that pattern before. What you're doing is you get lucky on trading this pattern, you have not put in the effort, you have not tested it, then you start projecting how much can you potentially make next time when you trade this pattern. That's what we call luck or / gambling as well. All right, so remember, the purpose of this workshop is to remember is to tell all of you, when you're trading a range, right, especially when you're trading a major reversal, the key level are always the ultimate high or the ultimate low. So let's say in between you see price forming minor rejection, you see price forming a bit of consolidation, it's fine to take a first attempt, because I always say a lot of the very good setups that you take are not going to be a winner on your first attempt. Sometimes it might take 2, 3, or even 4 attempts to get it correct. But the main thing is you need to identify whether if your price position, whether if your entry level is at a good value area or not. If the answer is not, you need to temporarily step away from the market and view things from hawk eye views and say, hey, am I really trading a pattern that I know? Am I really respecting the range? Am I trading at a value area where I think the bigger parties, the hedge funds, the big players are interested to get involved? If the answer is no, that means you're trading retail traders level. So what is retail traders level? The lower time frame level. Levels where it is almost non-existing on the high time frames, right? Which means the bigger players will not be able to see that. So you get wiped off very easily as well. Alright, so that's it for the video. If you like the video, please don't forget to like and subscribe, and I'll talk to you later.